I read the news so that you don't have to. Did you know there's just a handful of banks that decide which countries get billions and which get nothing? So the headline says that Zambia calls for domestic debt to be part of major indices. What does that mean? Basically, Zambia wants its local currency bonds to be added to the global bond indices. These are the benchmarks that big investors track. Why does this matter? Well, if a country gets included, automatic global money flows in from pensions, from asset managers, from ETFs. And thanks to rising currency, strong copper prices, and opening bonds to foreign investors, Zambia has already seen huge demand in its debt in 2026. So despite this, the bigger mechanism is like huge institutions don't pick countries manually. They follow these bond indices run by JP Morgan. So if Zambia gets added, billions could flow in overnight. And this goes to the question, who controls global capital flows? So at the moment, Zambia's bond auctions are heavily oversubscribed. They increased their foreign access to their bonds from 5% to 23%, and foreign investors now account for 49% of purchases. They've got really good high yields, 14 to 19%, and the kwacha is up 17% in 2026. It's one of the best performing currencies globally. This means big money is circling. Now, there is a wider context for this. Obviously, investors are always searching for these higher yields, and that's fine. But what we're seeing is these frontier markets becoming tradable. Countries that were once seen as risky are now part of these mainstream EM strategies. And also the power in copper. Zambia is Africa's #2 copper producer, and copper, the demand for it is exploding. And we know why. EVs, energy transition, AI, data centers, infrastructure, the works. So what are the implications for this happening? Thank you for asking. So if Zambia gets added to this global index, it means that billions in passive capital inflows are likely to follow. It could strengthen the currency, likely, and also that borrowing cost may fall over time. But there's always a but. This can be a double-edged sword. Obviously, everything is not going to be all roses. It may help refinance debt today, but it also increases the vulnerability to capital flight. If global investors exit, the currency and bonds can crash fast. You thinking you've seen this movie before? Yeah, think Argentina, think Turkey, think Ghana. So this is part of a broader theme of African nations entering global capital markets. There's this tendency to want to move away from IMF dependency and use market for financing, and more of these African nations are opening up their debt markets. So they're all competing for global investor attention. But the giants here isn't Zambia or the investors, it's people like JP Morgan and Bloomberg. Sadly, that means sometimes the difference between struggling and booming is whether Wall Street decides you exist.